A GST audit is a formal process of examining and verifying a taxpayer's records, returns, and other documents to ensure they are compliant with the provisions of the GST Act. The purpose is to confirm the correctness of the turnover declared. Taxes paid. Input tax credit, ITC, availed. Refunds claimed. It is a mechanism used by the tax authorities to ensure transparency, prevent tax evasion, and promote compliance in the GST ecosystem. Types of GST audits. Under the GST law, there are primarily two types of audits. Departmental audit, ordered by tax authorities. Who conducts it? This audit is conducted by a GST officer who is authorized by the Commissioner. When is it done? It is usually initiated based on a risk assessment, data analytics, or any discrepancies identified in the taxpayer's filings. Process. The tax authority issues a notice, Form GST Audit 1, at least 15 days before the audit begins. The audit is conducted at the taxpayer's business premises or at the tax office and must be completed within a specified time frame. Outcome. If any discrepancies are found, the GST officer will issue a report, Form GST Audit 2, detailing the findings and the tax liability, if any. Special audit. Who conducts it? This audit is conducted by a chartered accountant, CA, or cost accountant, CMA, who is nominated by the Commissioner. When is it done? This is ordered by a GST officer at any stage of scrutiny, inquiry, or investigation if they believe there are complex issues with the taxpayer's records, such as incorrect valuation of supplies or fraudulent ITC claims. Process. The GST officer will issue a directive for a special audit, Form GST Audit 3. The auditor must submit their report within 90 days, which can be extended by another 90 days. The expenses for this audit are paid by the government. It is important to note that the previous requirement for a mandatory turnover-based audit by a chartered accountant for businesses with an annual turnover exceeding a certain limit has been removed. Instead, businesses with an annual turnover above a specific threshold, e.g., 5 crore rupees, are now required to file a self-certified reconciliation statement in Form GSTR 9C as part of their annual return, GSTR 9. This self-certification replaces the mandatory third-party audit in most cases.